You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group and co-hosts Uncle Mike Tosaw from St. Charles Wealth Management, Mark the Greasy Meatball Sebastian from OptionPit.com, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Henry the Flowmaster Schwartz from Cboe. The Option Block is brought to you by Cboe. Cboe's suite of S&P 500 index options, SPX and mini S&P 500 XSP options, allows traders to speculate on the direction of the market, generate income, and hedge for downside protection of their portfolio of stocks. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cboe.com/SPX today to learn more. The views expressed herein are those of the speakers and do not necessarily reflect the views of Cboe Global Markets Incorporated or any of its subsidiaries, collectively Cboe. The information provided is for general education and information purposes only. There are important risks associated with transacting in any of the Cboe products or any of the digital assets discussed here. Before engaging in any transactions in those products or digital assets, it is important for market participants to carefully review the disclosures and disclaimers contained at www.cboe.com/US_disclaimers. These products and digital assets are complex and are suitable only for sophisticated market participants. These products involve the risk of loss, which can be substantial and, depending on the type of product, can exceed the amount of money deposited in establishing the position. Market participants should put at risk only funds they can afford to lose without affecting their lifestyle. And now, get ready to hit the Option Block.
All right, everybody. That music means we are back once again for a little bit of your bi-weekly options extravaganza known around the block as the Option Block. My name, of course, Mark Longo from the THE OptionsInsider.com, as well as from the network upon which all you folks are busy mainlining these days. Hope you're having a fun week mainlining on the content. We're having a fun week down here. I am coming to you from the scenic and sunny. I have been outside. Of the room, so I can confirm that it is sunny, scenic and sunny options industry conference here this year from Asheville, North Carolina. Of course, as usual, we're getting the lay of the land down here, chatting with a bunch of people that'll all be hitting the network probably later this week into early next week. We also just pulled all of the panel audio for you folks from this week. So look forward to that all hitting the network soon as first. That, of course, we'll be hitting the pro side first, so head on over to theoptionsinsider.com/pro if you want to get your hands on that over there, as well as all of my interviews first before they roll out to the full network. Should be a fun time. And speaking of a fun time, it's always a fun time here at the OIC conference because I get to do fun things live and in person. Like right now, I am once again in not just the same time zone, but the same room as our old buddy here at the Flowmaster, Henry Schwartz from Cboe. Mr. Flowmaster, sir, good to see you in person. I can confirm proof of life. You do live, sir.
Thank you, Mark. It's always fun. It's always fun to see you. And OIC, actually, I was trying to count it up yesterday. I think I've been to almost 20 of these conferences, and it's always really interesting. It's fun to see people too, especially if you've been in the business for a while. But you learn what people are up to, what different exchanges are up to. it's just it's a nice time, and it's kind of cool. They tend to pick a different location every year, so you never know where you're going to be, and you learn a lot about what's going on. I think it's really important.
It is indeed, and it's also important to welcome on our fellow options fans here. Let's see. Hopefully they can hear us here. We are recording from the interview studio that we set up here in Asheville, listeners. So hopefully the handshake is working. Let's go out to the dark and stormy shores of Maine first. Mr. Rock Lobster, sir, are you there? Can you hear us?
I am here. I can hear you, and you guys sound good. Oh, you're in Asheville, Carolina, going to a party. What a surprise!
We live a rough life here on the old options beat. You know, if you got out of Maine once or twice, then maybe you could see some of these fun things, sir.
I drove to New Hampshire to purchase an automobile.
Oh, there you go. Did you wave hi to your buddy, Mr. Matt? Actually, he's not there. He's cruising the Panama Canal as we speak, I believe.
Oh, really? It's hard to keep track of that guy.
That guy, yes, he's quite the globe trotter out there. And someone who is also not a globe trotter. He likes to hang his hat in the scenic and sunny lands of St. Charles, where we are joined once again by the uncleist of Mike's, Mr. Uncle Mike Tosaw from St. Charles Wealth Management. Uncle Mike, welcome back to the show to you as well. Oh, you know what? He's still fashionably late, as always. Uncle Mike, you know what? The guy likes to make a grand, easy for me to say, a grand entrance. So instead, we'll make a grand entrance of our own right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block, listeners. The portion of the show where we break down what the heck is trading, what has been lighting up our screens as I continue. If you hear notifications, listeners, it's because I'm getting pestered by people all the time with all sorts of notifications here during showtime. But you know what? We'll just mute those here as the show's going on. But of course, we've been chatting to a lot of fun people down here, which has been taking away a lot of my attention. So I was not glued to my screens, unfortunately, during Fed Day. The Fed coming out this week, and apparently people not loving what they heard towards the end of the day. At least yesterday, we saw quite the market downturn out there on the street. Coming into the start of the day today, looks like things are back in Uncle Mike mode, with the S&P up about 0.5%, the Dow up about 0.5%, and NASDAQ up about almost a full percent out there. As we go around the horn, let's start in the land of the dark and stormy stuff. Mr. Rock Lobster, sir, obviously a Fed day, a big week for you folks out there who were glued to your screens, who are not down here in Asheville like the rest of us. What did you think about what we heard from the Fed and what we saw in the market, sir?
Well, let's see. We have said on this show for how many years now that if the government keeps spending too much money, we'll have inflation. And we have finally discovered how high that number is. So Powell honestly said with a straight face, well, inflation, we still haven't licked it. It's still a problem. It's going back up, but rates are okay for right now. And I'm pretty sure it'll go away if the government stops spending X number of dollars. Every president has done it except for Clinton. So I guess we finally found a level that, causes inflation. It needs like an extra trillion a quarter, apparently. So I don't think it's an easy problem to solve. Because spending right now is 40% more than it was at the beginning of 2020. So I am sure somehow they could find the will, except of course for the interest payments that they have to pay now. But the AI thing is still, I think, bullish. There is tremendous opportunity still in technology. All that stuff is still hunky dory. It's just, can the knuckleheads in Congress and the executive branch stop spending money? And I don't know why Powell just doesn't start saying, you guys have to stop spending money. Stop being stupid. But I'm not a politician. I'm not running the Fed. But that's what I would tell these people. So I think Powell's kind of here, but I do not think the next the only way we lower rates is if somehow this does kick into some sort of recession. But the job growth is still pretty strong post-COVID, still growing. And when you're spending this much money, I mean, the federal government's hiring, so I don't know. It still seems like we have, we still have growth. GDP was a little lower than everybody thought, but the only way I think rates go down at this point will be, one, the government stops spending, or somehow we kick into a recession. So, and the recession looks like the least likely thing. So I think the bond market will end up telling Powell what to do with rates. And right now, the way it looks, they're going to stay where they are.
There we go. As we continue around the horn, my old buddy here, the Flowmaster, gave quite the presentation this week. We'll get to all that fun in a second, Mr. Flowmaster. I'll give you a chance to hold court out there. A lot of people were coming to me during the week, quoting Henry to me, saying, "Did you hear Henry said this? Did you hear Henry said that?" So Henry made quite the impression on folks this week. I was like, who is this person you're talking to? Who is this Flowmaster? I don't know him. But intriguing stuff. Before we get there, Mr. Flowmaster, I know you were busy like me running around the conference, so you probably didn't have a lot of time to watch things. But anything catching your eye from a broad market, vol, and just general perspective during a Fed week, sir?
Well, I agree with Mike. It's been interesting, and actually, debt was mentioned on a panel today as one of kind of the concerns on one of the panelists' radar. But yesterday was kind of wild. Actually, we did have a pretty solid run up after the Fed basically said they're not going to do anything, and then it all evaporated in about 15 minutes. And what's funny is by the end of the day, we were almost unchanged. And it's like, yeah, realized volatility still really, really low, but there are certainly pockets of things going on. So I'm with you. I was a little bit bummed that I wasn't able to really watch it and even possibly make a trade or two. But I mean, overall, we're still in the thick of earnings season. There's some excitement out there with that. And, the macro picture remains, there's a lot going on, right? We've got geopolitical unrest. We've got some domestic unrest in terms of these protests on the university campuses, which is certainly getting a lot of press. And, and in the meantime, investors are still investing and trying to figure out where the value is and where they want to put their capital to work.
And when you think of places to put your capital to work, you think of one place, none other than the St. Charles Wealth Management, where I do believe we are joined fashionably late, as always, by the uncleest of Mikes, Mr. Uncle Mike Tosaw. Mr. Uncle Mike, are you there, sir?
I am here. Can you hear me?
We can hear you, sir. Endeavoring to make a fashionably late entrance, and B, trying to boost the audio for the folks out there, because I know you care about such things, sir.
I do. I want to have good audio for our listeners. It's a good thing. So, yeah, I think that right now there is a lot of uncertainty and unrest. But like one thing that Andrew had mentioned is that we've talked about on this show for many, many years that if you keep spending money, inflation will happen. It is starting to actually happen. So we have that going on. But the one thing that I think is going to start being a factor, and I thought it was going to be a factor sooner, would be politics. We do have an election this year. And I want to start making me some Trump trades. In other words, if they'll say something 1 minute and then they'll change it the next second, and then we all of a sudden have things that we can trade off of. So, I mean, I'd really like that to start happening. Not trying to be political, but in those years when they would say more market moving things and then change their minds, it can be very beneficial. So I kind of hope that happens right now, but it hasn't as of yet. But we are getting into election season. We have the primaries coming up in a few months. And I do believe that politics will play more of a factor into our markets, whether we like it or not. The big mover that I'm seeing today, Qualcomm, up almost 9% on the day off of their earnings. So that's one of the ones where it blew through our covered call. But like always, that's a good problem to have. So I just want to be a good role model for all of our covered call traders out there. We're in Qualcomm. It's been a covered call stock for us for a long time. But right now, let's just say we're in the money. And I'd prefer it would have just sat still forever. But these are good problems to have because we made our maximum, will very likely make our maximum profit this month. With that being said, a couple other names that are making some moves. NVIDIA is only up 2% on the day, so that's up a little over $17. Netflix is up for just under 2%. So this is definitely a lot of tech movement. And then we got the Apple earnings that are coming out before the close today. I think it comes out at 1 o'clock Central Time, but Mark Longo can verify that. And we are in the midst of it. Amazon had earnings, I believe it was yesterday, and just a lot going on at this stage. So we're right in the middle of it, and hopefully you're prepared for it. That's what I'm seeing.
Mike, I believe you misspoke. The earnings, a special Saturday morning announcement this week for the first time ever. So they're breaking some new ground out there in Apple.
Oh, for Apple, got it.
I wouldn't want you to mislead our folks out there by telling them something that was blatantly incorrect, sir. How dare you?
The Flowmaster's listening to this and wondering, what the heck are these two idiots talking about?
He did think we were crazy. He probably still thinks we're crazy, but not for just this reason. So a lot of fun stuff to be had out there. Speaking of the Flowmaster, sir, I will now turn the microphone over to you. You had your annual kind of state of the options union presentation out here this year. Everybody, I won't say they come here for it, but it's usually a highlight for a lot of people out here. They like the data out there. He's become known as, when we call him the Flowmaster, but he likes to crunch the data out there for the rest of the folks, not just us. But that said, listeners, if you couldn't make it down here to Asheville, we got a little fun treat for you. We've got 48 minutes now for the Flowmaster to hold court on his full presentation. No, I'm just kidding. Give us the salient highlights, the interesting takeaways from your state of the options union this year, sir.
And I'm flattered that people listen to me, because this conference is a bunch of very senior. It's exchange leaders. It's top people from banks and market makers and broker dealers. And then they let me tell them what's actually going on. So I'm very careful with the data, because I'm always afraid I'm going to feed something out that's wrong, and then some very senior person is going to repeat it and get really mad. So, it's very funny. The theme this year, it's a little different. Last year, the theme was really zero DTEs. And then the couple of years before that, the theme was really retail, right? During COVID particularly. The theme this year is really more of balanced growth. We're really seeing there's no specific element that's contributing to growth, but market-wide we're seeing growth of around 8%. We just finished the month of April. I haven't triple-checked the numbers yet, but I know year to date we're pushing around 47 million contracts a day, and I still would bet money that we're going to be over 12 billion contracts. It's going to be close, but I think as we get towards the election, things are going to stay busy. I hit on some of the themes that I usually hit, the concentration of, what products are active. One of the things is recent over the last couple of years, we went from about 4,200 listings with options on them to over 6,000. That's come back in a little bit. We're below 6,000 now. That's ETFs, indexes, and single stocks. But out of those, it's about 4,000 single stocks. The top 10 do about 35% of the total single stock volume. So that meaning that the other 3,390 are really, doing only about 55, 60% of the flow. And it's very, very concentrated. In fact, every single month over the last year, the top three names have been Tesla, NVIDIA, and Apple in that order. And then, you do get a little bit of jostling around, number 7 and 8. But and the one thing that those stocks have in common is they're pretty expensive stocks, obviously NVIDIA especially. So we know that customers, when a stock is in the $800, $900 range or more, options become a very, very attractive alternative to buying the stock, even though fractional shares exist, and you can certainly sink $300 into a partial share of NVIDIA. Options really let investors do what they want. So a couple of the other big themes were, there's a bit of a gold rush going on in the ETF space. In particular, these defined outcome ETFs. These are things where a customer is able to buy an ETF that gives them the return of some broad index like SPY or NASDAQ, with the assurance that they're not going to lose more than X percent over the life of this of a specific term. And it's basically taking what traders like option traders have done for a long, long time in terms of buying a stock and then collaring it and turning it into a single product. So there have been some discussions about how that's bringing new people into the business, But it also extends into these yield ETFs, which you might have heard of. These are products like IWMY or QQQY, or there's Coiny and Tesla. They're very popular, and there are whole communities of traders that are all over these things. In fact, one of them, I think, published their April dividend yield as 100% annualized. And that obviously shows up at the top of a lot of scans that somebody who's looking for dividend income might be running. But what's really important to know, and I think it's why we try to educate the community and the world, is these products are just selling options. So there's a lot of things you need to understand. Yes, you actually do get yield when you sell options, but you obviously are also taking on some convexity risk. So, kind of understanding what that's doing to volume. I actually showed in one presentation how to spot the trades that these ETFs are doing, because in most cases, the strategies are very, very clear. That's important when you're creating an ETF. And they actually disclose the holdings as well. So if you go to the website of one of these ETF providers, sometimes it takes a little bit of hunting around, but you'll find their list of holdings, and then you click on it, and you go, oh, look, I can see they're short these specific contracts. And for me, it's a lot of fun to go and say, okay, so this ETF says they're short 700 of these puts. Let me go see when those traded, and without fail, they trade within the last 8 or 9 seconds of the day. And then you're trying to figure out whether they get a good price. Is anybody trying to get in front of these orders? What else can I learn from this? So that was a big theme as well. And then I love hearing from all of the 6 exchange operators are represented here, and you learn what these exchanges are thinking of. Miami is getting a new trading floor. It's actually going to be located in Miami. That's starting in August. And so there was discussion about why we have trading floors at all. But you know what? Now we're going to have 6 trading floors. So they obviously are serving a purpose for the industry, or people would not be investing in building trading floors. And then one other thing that I just learned today is that their NASDAQ is filed to list Monday options in those ETFs that they already have listed Wednesdays in. So this is like USO and GLD. So we still don't have daily options in any ETFs except for SPYs and Qs and IWM. However, we are taking, I guess, what I would say, small steps towards getting dailies in some other products. And then, of course, and the debate about short-dated options dailies for single stocks has really been raging. And that was also a big topic of our meetings this week. So it's been a lot of fun. And I got to say, Asheville is a beautiful place.
I wouldn't know. I've been in this room pretty much for 3 days. I hear good things. I saw nice things when I drove in from the airport. But other than that, yes, most of my scenery has been what you're seeing here. And now, Mr. Flowmaster. I will bring it up this because from my conversations I've been having here in this room this week, a couple of interesting things have come up. First off, everything old is new again, including Flex. You were kind of the first one to start mentioning Flex here recently on the show a few weeks ago. I think it was it Nicola you were talking about, where the OI in Nicola is, and Flex is equivalent, if not greater than what we're seeing in the listed out there, which is an eye-opening thing in and of itself. But so many people coming through here this week have been, let's just say, giddy about the prospect for Flex now, listeners. So if you want to know, top of 0 day, everybody's all fired up about 0 day, and the top of 24-hour trading. The other thing everybody's all hot and bothered about at the 2024 Options Industry Conference is Flex, listeners. Flex options. So these non-standard options, because of exactly what Henry was saying, all these defined income ETFs out there, or defined option strategy ETFs out there, are utilizing Flex options to hedge a lot of this stuff. We also, because of rates are getting juicy again, we are seeing a hefty amount of RevCon business going up in Flex as well. So everyone is now scrambling to upgrade their Flex offerings out there. So I expect a Flex arms race coming in the next year, Henry, as I think you and I are not done talking about Flex, sir. What do you think?
Oh, I agree. And there were 2 things I covered last night that brought me back to when I started in the business in the late 80s. One of them was Flex options, which have been around that long. And back in the 80s, it was like, well, there's these weird little things that can trade off on the corner of the floor, and nobody knows about it because there's no trading screens to look at, and there's no time and sales to see. And the evolution of that to where we are today, and you're right, 2 new exchanges that currently Flexes are traded on just the 4 traditional floor exchanges, right? The Cboe, ARC, Philly, and Amex. The BOX exchange filed to trade flexes on their floor, and then the ISE announced that they're building electronic flex capacity, and that's because of what we're seeing in the activity. You know, in like you said, in Nikola, if you don't look at the flex positions, you're missing more than half of the picture. And there is a consistent 600,000 contracts a day trading in flex because of, you know, like I said, these defined outcome ETFs tend to use flex. The RevCons tend to use flex because they can get their European style, which is what they need for those trades. And as it continues to get a little bit easier to trade and see what's going on in these names, and you know, at Cboe, we're actually putting analytics on flex, so you can actually see a flex trade with the delta and even with a theoretical value, which is kind of cool because there is no bid offer to go by on a flex. So when you say, "Hey, did you see this flex traded at $1.75?" People are like, "Okay, but I don't know if that's a buyer or a seller. I don't know if it's tied to anything else." Well, you know, with the analytics, which, you know, is, you know, you put in the right work and you can get good values, you can say, well, and did you also notice that, you know, the value was $1.43? And that all of a sudden is the context that people need to make some judgments about what's going on. So the other thing that I was a throwback was I talked about boxes last night at a Cboe event, and you know, there's actually the box ETF BOXX, which trades SBUX boxes, and that was one of the very first things that I was given as a clerk was figure out the splits on these boxes, because you had to get fractions to work out to be a decimal price. But we continue to see evolution in that. In fact, Cboe is going to permit real-time quoting of box spreads as a unit in our complex order book, and so that's a big advancement over looking at the deep options and trying to figure out where mid-market is, which is pretty sloppy in an option that might be trading at $800 or $900 because it's deep in the money. And so this is the beginning of something. You know, the complex order books have always been, you know, they you know, about a third of the activity, and at least in the ETF and single stock world, is complex orders. These complex order books are one of the areas we've seen an innovation for years and years, because each exchange is really able to put some creativity into what spreads are supported and how it works and how are they really matching up these trades and how are they advertising these trades to maximize liquidity. So those are both pretty interesting developments.
Yeah, a lot to unpack. So if you had told me when I came down here this week that I'd be all about flex, talking nothing but flex this week, I would have said you're a crazy person. But that's why we come to the show, listeners, to see what everybody is excited about. Let's see what folks are excited about out there in the markets. Actually, before we get there, because you were talking about some numbers, Mr. Flowmaster, I have some numbers of my own coming in hot off the presses from our friends over there at OIC and OCC. We have the numbers for the month of April now, listeners, here. And everyone was doing a lot of hand-wringing in March because, it's one of the first real downticks we've seen in options volume in the really 4 years post-pandemic. They've been mostly straight up. We've had a couple slightly down. This was about 10% down, so that was a big downturn. So some people were looking at that number and wondering what that meant for the future. Coming into April now, it does seem like we are reversing that trend a little bit. And of course, March was an outlier as well, because that goes back a year to the contagion fears of a year ago. So of course, March of 2023 is going to be a banger volume month. But how did April come in? The answer is pretty strong. April net up nearly 6% year over year, 5.7%. Equity options also, that's been a discussion point as well, because they were kind of lagging for a little while coming into the end of the year, beginning of this year. In fact, they were pretty much flat on the year last year, equity options. Ticking up in April, up 6.4%. ETF options up 2.5%. You don't need me to tell you index options are where the action is. They're up nearly 17%. That all nets out to a total of about 5.7%. Even futures, even good old VIX futures, getting a little bit of a lift, up 10.1% out there. So intriguing stuff on the overall options volume front. So if you're wondering, is this is March the death knell for the options volume growth trend? Apparently the answer, for right now at least, is a resounding no. Now let's keep on rolling here with the rest of the show. In terms of other volume out here right now, is it a banger day? The answer is nah, not really. VIX looking pretty anemic, a little bit shy of 170,000 contracts on the tape right now. The ADV is still impressive though. 928. SPY looking better. SPY at about 4.7 million. The ADV 8.6 million. The S 1.6 million. The ADV about 3.25. Small caps kind of the laggard today, under 500,000. 474,000 contracts on the tape there. The ADV is about 1.4 million. And the Qs also looking like 1.8 million. The ADV 4 million. Let's run through the top 10 most actives really quickly here, because it is earnings season, listeners. So you might be forgiven for expecting a little bit of a pop out there. Is it a banger day on the single name front? The answer is, again, it's respectable. 214,000. That's what it cost you to break into the top 10 today. That gets you to our old friend Qualcomm, which is popping hard today, up 16 handles and change, trading 180 and a quarter right now, and good for the number 10 spot. 214,000. Number 9, we're just talking about N electric vehicle manufacturers. I'm not talking about Nikola now. We're talking about NIO this time for number 9. 216,000. A NIO $5.50, popping a quarter of a buck today, or nearly 5%. So a decent day out there on the NIO front. Number 9, 216. Number 8, we're going out to Pfizer, 277. You know it's earnings season when Pfizer is making its way into our top 10 listeners. 27.84, up about 65 cents, or about 2.5% on the day. Number 7, Carvana, again, earnings season, giving us all kinds of gifts, listeners. Carvana, $113.65, up $26.50, or 30%. So I guess, spoiler alert, they came out with good earnings. My goodness, this name has been back and forth. They were banned in Illinois for a while, and then now they're rallying 30%. So apparently the worm is turning out there in Carvana. Number 7, 325 on the tape. Number 6, the Amazonians, 426 on the tape for them. They're trading right now 183 and about a half, up $4.50. So the street apparently liking what they're seeing out there for the Amazonians. Number 5, going out to China, it's Baba, $81 almost, up $5.50, or a little over 7% today for them. Good for the number 5 spot, 430,000 contracts. Number 4, it's Uncle Mike's favorite, popping off on Saturday morning. So get up early, watch your cartoons, and get the Apple earnings, listeners. 172.70, up about 340 today, or about exactly 2%. Good for the number 4 spot, 550,000 contracts. If you don't know what we're joking about, by the way, with Apple listeners, you gotta go back to the early days of the show. So that's a Easter egg for long-time listeners out there, listeners. Number 3, it's AMD, 145.40, up about $1.10 on the day, or about 0.75%. Good for 612,000 contracts. Numero due, you can probably guess what it is by now. It's NVIDIA, 854 and change, up about 23.75, or nearly 3% on the day. Good for 816,000. And actually a rare light day for Tesla, 180 and a quarter, up about a quarter today. So not having one of these exponential moves that it's been having of late. That's probably why it's hanging out right around the level we expect from it, right around 1.4 million. No 3.5 million like we've seen lately out of Tesla out there. So a lot of fun stuff popping off. If you're looking for earnings, there's more coming out. We've got Peloton today. We have Apple, of course, after the bell. We had Coinbase today, DraftKings, Square, Moderna, a lot of fun. And Friday, something Henry may be familiar with, something called Cboe. I'm not familiar with them. So they're popping off tomorrow before the bell as well. As we keep on rolling, time for us to pop off with a little bit of weird activity. It is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, it is time to get weird. It is time to get wild. It is time to unleash the Flowmaster in person, live and in person here, listeners, to see what weird paper is lighting up his tape in between holding court on the state of the options industry this year. Kicking things off in a name I haven't looked at in a while. Listen, this is SBUX, good old SBUX. They used to be out there in the IBM pit on Cboe as well. He traded Intel, or excuse me, he traded IBM, and then you probably traded SBUX as well. But decent day for them today, up slightly, kind of unched, but it's been a rough year for good old SBUX listeners, kind of having some steer step falls from grace, trading again a little bit shy of $75 right now, off almost $40, or about 34, almost 35% from where they were trading about a year ago. So a rough year here. Obviously, the input prices are weighing on them, but a lot of other things appear to be conspiring against SBUX as well to have a pretty rough year out there. Mr. Flowmaster, sir, What caught your eye out there in the land of good old SBUX?
So I noticed this one actually because I own some Starbucks. I have been a put seller from time to time. I tend to buy my coffee there, and I can't believe that I paid $3.64 in New York for a regular cup of coffee, and then I see the person in front of me pay like $9 for some sort of frappuccino. So, I actually like the company. They definitely. I think they reported some same store sales were down or something. So stock got smoked. $75. To me, it's still one of these stocks that like I'm kind of comfortable taking some risk in. So, but the trade I noticed today was a big put buyer. So the main 90 puts, we saw a sweep of 10,000 of these from 1675 up. So $16.85 times 10,000 contracts. And when I see a trade like that and a stock that's gotten hit and it's in the money put, I immediately go and look at kind of the trade history to figure out like, I wonder if somebody's taken some pain. And that's exactly what this is. I can actually see in the trade history that on Feb 23rd, the exact same quantity traded, the net open interest increased. And at that date, they were an outright seller in the form of a sweep for like $1.66 and $1.63 when the stock was $96. So this is somebody crying uncle and saying, "Oh, I guess I wasn't as comfortable with the downside as I thought I was." And I've been there, and it probably means somebody oversized the trade, and because that's a big hit in P&L to take. Lock in a $15 loss on a 10,000 lot. Good for the market maker community that provided the liquidity on both sides, but. Kind of the conspiracy theorist in me also uses this kind of a trade as a sign like now the stock's going to bounce, because that's what will make that trader who is suffering and probably having a terrible week the most annoyed is when we run back up to $85 in the next month or two. So I actually might use this as a sign to sell a couple more puts.
How very contrarian of you, sir. I feel that guy's pain. We've all been there. And that probably would happen. You're right. It'll whipsaw right back up to $90, and that guy will be crying all the way in the other direction. Mr. Rock Lobster, same question for you. When's the last time you've done some slinging out there in SBUX? It's been a while since I've talked about SBUX. And what are your thoughts on somebody finally reaching their breaking point today with some puts in good old Starbucks, sir?
Interesting. I was also going back to Henry's earlier comments about Flex. I actually I've been acquiring just more Cboe stock just because of the whole Flex. I think the growth potential there is kind of big, like especially OTC and all the gajillions of dollars that trade with no counterparty, with counterparty risk and everything. All the cool thing about Flex is that it's all OCC cleared. So the fact that those other exchanges are now like waking up and starting some OCC cleared Flex capability just makes me actually more bullish because the Cboe is still a leader in that. Anyway, that's a side note. Just anyway, talking my book mostly because I'm long it. But anyway, I would say like a Starbucks. Again, I'm in the middle of nowhere. I buy my coffee from the guy down the corner that roasted in his barn. I'm not the best Starbucks guy. But I could see how this could be a somebody just kind of puking it out and then now waiting for the bounce on the other side. I like how Henry says it will make it most miserable if the thing bounces straight up and does the rubber biscuit bounce. So I can't disagree with that since I've been on the whipsaw of that more times than I can remember. That likely is what's going to happen. I guess that's why I became a curmudgeon.
We've all been one too many Starbucks puts you got burned on. That's what turned you into the curmudgeon that you are today. Starbucks puts. That's what we have to blame, listeners. As we keep on rolling out here, we'll see what the eye of the Flowmaster is fixating on. We've also got another one out here. VIP Shop Holdings Ticker symbol VIPS, VIPS, Chinese e-commerce company. This is an ADR, listeners. Trading 16.10 today, up about $1.12 or 7.5% today. So a good day today for them. Also, kind of a topsy-turvy year, pretty much netting out to up about $1.15 on the year. So today's move puts them up on the year. Fine, I guess they were flat coming into today. They've had a lot of topsy-turviness. A year ago, obviously trading right around this level, and then up to about 18, almost $19 in July before giving up the ghost and falling. Looks like to their 52-week low of about $13.80 back in November, early November, and then rallying hard again in February. They hit. They had strong earnings back for Q4. They hit their high for the year about $20.19. So they've fallen about $4 from that high, but they're still up about 7% on the year. Mr. Flowmaster, I know you do a lot of shopping in VIPshop.com. It's your favorite online e-tailer. But what caught your eye out there today, sir?
I'm not even sure what they sell, but what caught my eye was a call to put ratio of about 12-1 and a focus on these August 18 calls, where we've seen a few thousand trade. 2,500 of these have traded, and the average daily volume in this thing is only about 600 calls a day and 400 puts. So well beyond the average trade size. This is an opening trade, unlike that SBUX trade. And, they seem to be kind of targeting a specific, $2 out of the money. The stock has been there before. So, this could be kind of a macro play. I think the China in general is having a pretty strong day today. And, one of the things that, this year really is an interesting mix, right? We've got, interest rates that the Fed kind of wants to lower, but they can't do it because the data is just not there. And then you have an election, and the election obviously is going to have some impact on our relations with China. But also you've got China's in the news periodically anyway. So this one basically somebody paying up to $1 for these Augie 18 calls when the stock's only around 16 is a bullish sign for me. And like I said, I have some friends who've been kind of trying to get long China one way or another. I think they like the K-Web ETF as their instrument of choice. But just a bullish sign, and it's unusually large. It does look like they're picking August, so this is probably a slightly longer term trade. But just straight up call buyer.
Mr. Rock Lobster, are you down with a little bit of VIP shop calls? So you like these August 18s?
Yeah, I think they're for sure reasonable calls to buy. The stock was $20. So, if China's going to rip, having a online retailer would be Certainly a good way to go. But, we have heard that China's going to rip narrative now a couple of times. But I think these calls are, again, reasonable purchase, pretty close to the money. And the stock was $20. So it does pass the initial sniff test for sure. And I think are they up money on these on day one too? I believe, let's see here. They paid 95 cents for them. And they're already 105, 125. So I don't know, but
they pass your first sniff test.
It certainly is a good sign on day one when your calls are in the money.
You do get giddy when they're making money on day one. That is kind of
it is making it feeling warm and fuzzy inside.
It is the opposite of the SBUX trade for you. It doesn't.
It's the opposite of the SBUX trade.
All right, we'll get out of here on this one. This is actually checking in on a trade from Monday that we profiled on the show, listeners, and we said we're probably going to know by the end of the week how these bad boys are looking because they do expire tomorrow. As you recall, listeners, we're talking about MLCO Resorts and Entertainment Limited, ticker symbol MLCO, MLCO. It's been an interesting year for them, kind of selling off hard, off 6.25, about 46% on the year. So they were trading around almost $14 a year ago. So not a great year for them, but looking a little bit better today, listeners, popping 63 cents or about 9.5%. And that is clearly what our friend was going for here on Monday. We profiled the whole boatload, to use a technical term, of the May 7 calls. So the stock at the time was $6.55. This was right before earnings. So this was all a big earnings roll of the dice, listeners. There were earnings on Tuesday, I believe. They paid 20 cents for these with a stock $6.50, 4,152 times, total about 9,000 traded on the day. These are obviously looking pretty good right now. There's still quite a few open on this strike here. And coming in right now, the stock, like we said, over $7. So they paid 20 cents. The stock right now, like I said, was at about 722. So by my quick back of the napkin math, they are at the very least breaking even. If we can get a little bit higher, let's see, how high did it get today? We're at the high right now, 722. So if it can hang out here, maybe move a little higher, then these calls going to be looking all right. At the very least, they're not going to be hemorrhaging a bunch of money like we've seen a lot of people doing out here on these upside calls. Mr. Flowmaster, are you a fan of all things MLCO resorts? What do you think of our friends here? Looking pretty good right now. Obviously, a day to go. Anything could happen, but they at the very least can scratch these right now, which is not the worst outcome, sir.
Yeah, I would. It looks like there's a couple thousand of the October 8s on the tape. So maybe somebody's kind of trying to trim it a little bit, monetize a little bit. So that's pretty nice, though. I mean, I'll tell you that market's been whippy, right? Yesterday's a good example at the end of the day. So if we're in kind of this environment where things are going to be a little sideways, then there's all sorts of opportunities. I mean, and it was funny. I think we were on the show a couple weeks ago. I was saying, well, maybe the buy the dip has turned into sell the rip. It didn't seem that way, right? We actually really kind of bounced back most of the way. Not back to all-time highs, but we're certainly off of those short-term lows.
Speaking of bouncing, the Rock Lobster pointing out, so he's found some data he thinks backs up your hypothesis that Starbucks is about to rip because there's no bid for the June 60 puts. There's no bid at 12 cents. So nobody wants to touch them. There's no fears.
No, they're 12.14. They're 12.14.
Oh, 12.14 now? I thought
but
no
still, like the stock just fell out of bed and the 60 put is only 12 cents.
Yeah.
Like nobody's freaking out about this one. Put it that way.
No.
So they were just waiting for that guy to blink. That's what they were waiting for. And now it's going right back the other way. They knew he was open. They knew that. They're not fools. They were waiting, and now he blinked, and now the turnaround can begin, listeners, as we turn around right on into our final segment. Let's just go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block, the portion of the show where we tell you what we're keeping an eye on for the rest of the week and of course the weekend until the Monday episode. Going to do a little bit of double duty here too. Also going to get everybody to weigh in on our question of the week here. So it's a twofer. We will start with the Uncleist of Mike's. Mr. Uncle Mike, sir, what are you keeping an eye on over the weekend until the Monday episode? And then B, our question of the week, sir, is we asked everybody before we came down here. It's OIC time for us to catch up with everybody in the world of options. What do you think will be the hot topic? What would you like us to talk about? And we gave them three choices. And of course, the infamous other, the impact of zero-day options, 24-hour stock trading, the whole options volume surge. Can that continue? Or other. I will tell you right now, other got write-ins for the Bitcoin options ETF. So we did talk about those quite a bit. Pointedly, we did not have Flex on here, which was clearly an oversight on our part. If we had this to do again, we'd have to add Flex. But Mr. Uncle Mike, sir, what are your thoughts? What do you think the people really wanted us to talk about down here at OIC this week? And B, if you have your own write-in, by all means, have at it. And then C, what are you keeping an eye on over the weekend until the Monday episode?
Well, so I'm guessing the people wanted to hear about zero TTEs on individual stocks. That's what I'm guessing. I don't think that was one of the top three. That would have to be an other, wouldn't it be?
If you lump it all in with 0 day, then that could be the one. Just we have the impact of 0 day pretty much.
Got it. All right. So I'll go with that one. In terms of what I'd like to know about that too, because I think that is going to affect the pricing of stocks. It's not something I ever really see myself doing, but I do think it's going to have impact on the option market in general. Because if people want to do zero DTEs on an index, why would they not want to do them on Apple or Tesla or whatever? So I'd definitely be interested in hearing about that as well. In terms of things that I'm watching, speaking of Apple, I am seriously wanting to watch this earnings announcement today, see where Apple goes with it. I think that is going to be a market mover, and then just continuing to watch to see if we can, wherever Apple leads us to, seeing if it is a bad news earnings announcement, if we can hold the 5,000 level in the SPX, which I think we would, or if it's good news to see how far we can go up. It doesn't look like rates are going to be, or bonds are going to be much of a market mover, although they are. A couple of my ones that I follow are getting some bids today, but we'll kind of see where it goes. Definitely more market focused right now.
And if folks want more Uncle Mike in their lives, sir, where should they go? What should they do?
By all means, you can follow me on Twitter at Mike Tosaw, Tosaw, or go to my website, stcharleswealth.com, if you want to book an appointment with Uncle Mike.
Search for hashtag Uncle Mike on Twitter. Who knows what you'll be find, but I'm sure it'll be interesting nonetheless. stcharleswealth.com, the place to go to learn more, listeners. As we go out to the dark and stormy shores, Mr. Rock Lobster, sir, what are your thoughts? What did you think we should have talked about this week? Is it one of these three things, or is it maybe something else you have your own right in, your own curmudgeonly right in? And then B, what are you keeping an eye on through the weekend till the Monday show? And then C, if folks want more curmudgeon in their lives, where should they go? What should they do?
I think the 0 DTE thing, if you get cash settled equity, will be a monster product. I mean, I deal with retail traders all day long. And I'm just telling you that, like, the whole exercise thing gets people freaked out. You know, that's why they like trading XSP. So that would be I would say the 0 DTE thing. Just, you know, it might suck all the oxygen out of all the other option trading, but at least on the top, probably, like Henry said, you know, top 40, 50 names probably do, the bulk of the volume. I think that would be a fun, like, so many ways to trade that. It would be like, anyway. So yes, I would say 0 DTE far and away. I think 24 hours, freaking dumb. All it's going to do is just put liquidity in weird places. I think it's just, open it up, trade it up, close it. That's my view on that. But I'm old and curmudgeonly. If they want to check us out, 888-TRADE-01, and you get 10% off anything at Option Pit if you want to learn how to trade from an old curmudgeonly dude. There you go.
I could see why you're so gung-ho for the cash settled, because that's going to be a bonanza for educators, because everyone's going to be confused as hell. Wait a minute, which Apple put did I just sell? Did I hit the cash settled one? What is physically settled? What does that mean? So I guess
I resemble that remark.
You're talking your book there, though. I get it out there. Okay. Check them out in the meantime. Optionpit.com is the place to go, listeners. And last but not least, Mr. Flowmaster, what was your choice of our three choices? The volume surge, the 24-hour option and stock trading, or the whole 0 DTE bonanza? I guess if you want to write in flex, you can have at it. And then B, what are you keeping an eye on until your next appearance next Thursday? And then C, if folks want more Cboe goodness in their lives, where should they go? What should they do?
I'm tired of talking about 0 DTEs. So I'm hoping maybe the listeners are as well. I'm going to go for 24-hour trading, or at least extended hours, because there have been some interesting conversations about that. And I'll tell you something interesting. I heard a great idea. I'm not going to name his name because I didn't ask him, but when we were talking about short-dated options on single stocks, and most people understand the nastiness with contrary exercises and the confusion that people are worried about. And there are two camps, and that debate's probably going to go on for a while. But he said, well, geez, if we just made sure that nobody announced earnings and after the close, that everybody did it pre-open, then a lot of that goes away in terms of the yuckiness of a stock that's really, gets very, very whippy after hours, but before the exercise window closes. And, I was talking to a couple of people, everybody's like, that's a pretty good idea. Actually, the question is, how can you enforce it if that's something that the SEC actually could tell, Apple, instead of announcing today at 4:30, hold everything till tomorrow morning. So I thought that was really pretty interesting. On the concept of cash settled single stock options, or OCC is in the middle of a 10-year redevelopment of their clearing platform, which they're towards the end. Actually, they're not in the middle; they're towards the end of it. But people have pitched a lot of things to OCC, and there's just a lot of things that are on hold to even discuss until they really get that rolled out, which is probably sometime next year. So, and And then what I'll be watching, I mean, the earnings, we've got plenty of big ones still. Apple obviously is an exciting one for today. So, you know, we're in, I think we have another week or so of earnings, and then we'll be done with that. And I'll just, you know, like I said, I kind of, my feeling is like we're going to be in kind of a choppy market, which is the kind of market that I like in terms of, you know, picking your spots and maybe selling some Starbucks puts. And if anybody wants to find me or to get a trial of the services and platforms we have at Cboe, just go to cboe.com/RMA, which is Risk and Market Analytics, and we're happy to set you up. And you know, you can actually see all these flex trades we've been talking about. I'll tell you, when we were talking about a couple of these names, even you know, today's odd block. You know, it's one of the things I go double check. Is there any flex that I need to know about? And there isn't. But you know, when you've got 600, 700,000 contracts a day, it's becoming something that everybody's going to have to keep an eye on.
That'd be interesting if the SEC steps in and says, just to protect the options markets, you all have to announce before the open. That'd be interesting to see that unfold. And I was going to point that out for you too. That's something I'm looking forward to seeing. You're going to be roping the flex into your standard volume queries and trade alerts.
All
right?
the commands.
Is it all there now?
Not yet.
Okay, so next time you fire up your trade alert, listeners, and you want to look at total option volume and whatever name, maybe Starbucks, and then when you do that, you will be able to see now the flex in there as well, which is very cool because something that was very opaque until very recently. So very fascinating stuff. Check out all that good stuff Mr. Flowmaster and the team are working on. Cboe.com/RMA is the place to go. By the way, the results of our poll, it's still live. It's got about a day left. It is our question of the week. You folks are going back and forth. It is a hot battle between 0-day options and 24-hour stock trading. When we first listed it, 0 DTE ran away with it, about 75% of the early voting. Now as the week has progressed, it's a grudge match. 24-hour stock and option trading now taking it with 45.8%, followed by number 2, 41.7% for 0-day, 8.3% saying you want to talk about what's going on with options volume, which we did a little bit for you today, listeners, so you're welcome. And then a bunch of others coming in for the Bitcoin options, which, spoiler alert from my conversations from this week, listeners, which you should be checking out on the network soon. We'd like to pose all those questions to everybody so you can hear their answers in real time and see for yourself what the people who are making these decisions, what they're thinking on these. It does seem like the Bitcoin options are a bit of a distant pipe dream at this point. So a spoiler alert for those. I don't mean to burst any bubbles, but not exactly optimistic on that front. But you could hear all that goodness for yourselves coming in a little bit on the network. Other coming in 4.2%. But that is going to do it for us on the option block. Also going to do it for us on the network today. TWIFO will be hitting on demand. I recorded that already down here because I have to go catch a flight pretty soon, listeners, so I could fly back to good old Chi-Town in time for Vol Views tomorrow, so we can have some fun in the studio again tomorrow. So back again tomorrow, noon Central, 1 p.m. Eastern for Vol Views. After that, exclusively for you pro folks, coming back one final time for Options Oddities. Stay tuned to the network for all the goodies coming from OIC pretty soon, and we'll be back again on Monday, another episode of The Option Block.
The Option Block is brought to you by Cboe. Cboe's suite of S&P 500 index options, SPX and mini S&P 500 XSP options, allows traders to speculate on the direction of the market, generate income, and hedge for downside protection of their portfolio of stocks. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cboe.com/SPX today to learn more. The views expressed herein are those of the speakers and do not necessarily reflect the views of Cboe Global Markets Incorporated or any of its subsidiaries, collectively Cboe. The information provided is for general education and information purposes only. There are important risks associated with transacting in any of the Cboe products or any of the digital assets discussed here. Before engaging in any transactions in those products or digital assets, it is important for market participants to carefully review the disclosures and disclaimers contained at www.cboe.com/US_disclaimers. These products and digital assets are complex and are suitable only for sophisticated market participants. These products involve the risk of loss, which can be substantial and, depending on the type of product, can exceed the amount of money deposited in establishing the position. Market participants should put at risk only funds they can afford to lose without affecting their lifestyle.